This conference will now be recorded.
Can I start? Type S. If all of you have opened the latest sheet which I have forwarded now. What are we learning today? We learned the balance sheet and we learned the income statement. We yet to learn cash flow statement. But to practice, let's start solving something which involves both income statement and balance sheet. I understand yesterday you were confused with the last problem, but we'll come back to that. So that way you're not left anything that is not understood. First, what we will do is let us try to solve the first one. The case study 1 I will solve. I would expect you to solve the case study 2. Small information on this. Yes, I have not taught you about cash flow. There are two types of cash flow. One is called as direct cash flow. The other one is called as indirect cash. Most of the companies use indirect cash flow. Very old before, for small scale business, they were using direct cash flow. What is the difference between direct and indirect? At this point of time, I will not explain you about indirect. It's too confusing. What is direct cash flow is? It's a very simple thing. All the incomings will be positive and all the outgoings, which you know already, will be negative. Means cash coming to the bank will be positive. Cash going out of the bank will be negative. Okay. So all the incomings and all the expenses will be recorded in the direct cash flow. Okay. Indirect is not so simple. A lot of things to be added. At this point of time, if you see there is a separate column which says cash. If you see on the Excel sheet, you have a cash over here. Right now, blindly assume that this is like a bank where money is coming in, money is going out. So that way, plus or minus, and finally we'll add up to it. Okay. First, let us go a simple problem, case one, understand what it is. I'm sure you would have done it before my explanation only, but for others who will get to understand, I'll explain slowly. On January 1st, 2019, rupees 1 lakh capital introduced in the business. What should I do? Obviously, we all know this will go and sit under equity capital as 1 lakh. What else should I do? Excellent. Cash. Obviously, it has come to mind, but right now I cannot touch this cash. Okay, I will tell in the bank I have received 1 lakh, so it will be plus. Okay. Next, computer purchase worth rupees 20,000. Okay, so that means computer is an asset. So it goes on the balance sheet on the right side where it will be 20,000. What else should I change? Excellent. It has to be deducted from the cash. How did I pay 20,000 to buy the computer? Obviously, I would have drawn money from the bank and pay to the supplier for me to buy the computers. So that means in my bank, there is a short of minus 20,000. Next, advance rent paid rupees 10,000. Okay. Remember, advance rent is nothing but advance prepaid expenses. So last yesterday we understood under the balance sheet, prepaid expenses will come under assets. In fact, you people only told me that. So that means over here it will be 10,000. And I have paid from the bank, so it will be 10,000. Deposit paid rupees 20,000. So deposit is also 20,000. Now you might get confused. So how is prepaid, deposit, everything is coming into the assets? One thing I will tell you, when you pay something, when you pay something in advance, that means somebody owes you. When somebody owes you, it becomes an asset. When you owe to somebody, that becomes liability. It's some exactly opposite to that. Okay. So somebody owes you because you have paid means I have paid 1 month advance rent. Say January 1st only, I paid rent to stay in the PG for next 31 days. So don't you think the landlord is supposed to give me access to his PG for next 31 days or 30 days? So he owes me until 30 days because I've paid well in advance. So that is why it is an asset. Even deposit, which I know I will get it back in future because I have paid it in advance. So that is why it is an asset. And we are recording it under the balance sheet asset. Obviously, it has come out of my pocket 20,000. Okay. If in case I have used the PG, if I have used the PG for 30 days, my landlord is waiting at the door, waiting for me. Why? Because I am liable to pay the rent for the 30 days used. So on 31st Jan, I pay the rent. So I was liable to him to pay on 31st Jan. But if I pay on the 1st Jan to use for the next 30 days, that becomes an asset. That's it. Next. What is it asking? On 11th January, I bought 100 books worth rupees 100 per book. Amount paid after 30 days. Okay. Can you tell me what should I do on 11th Jan? How should I record this? Fantastic. Increase my inventory. I will show you how to record it in an Excel sheet. Don't directly use calculator or mobile uh, calculator where you will find out the answer and then type it directly. Don't do it. Equals 100 books. Each price of that book is 100. So equals 100 into 100. Type it like this. All right. So inventory will increase by 10,000. What else will happen? My account payable will increase. How much? 10,000. So I can directly type 10,000 because I'm not paid. I said I'll pay after 30 days. So I am payable. How much? 10,000. Anything happens to my cash? No, because I'm not paid. So nothing goes out of my bank. So it is empty transaction with respect to bank. Next, on 16th Jan, I sold 50 books and the selling price was 200. So what happens to my selling price? Quantity sold into selling price. Did I get this amount? 10,000? it says that this money 10,000 will be received after 30 days. What happens to my account receivable? There also it increased by 10,000. Is this clear until here? If I am fast, let me know. All right, now everybody is responding. Great. After this, what happens to my COGS? How do I calculate COGS? Exactly. COGS formula is quantity sold into cost price. So my COGS purely depends upon how many books I have sold, not based on how many books I purchased. It depends upon how many books I have sold. So it clearly says I have sold how many books? 50 books. For selling, it should be selling price, but for COGS, it should be cost price. At what price did I buy 100 rupees? Quantity sold into cost price when it comes to COGS. When it comes to sales, it is quantity sold into selling price. Okay, keep that in the mind. Quantity sold into cost price. This will be quantity sold into selling price. That's the only difference. But quantity sold will be always same. Now you know how to calculate profit. Profit is how much? Sales minus COGS. 5,000 rupees. Can you tell me what happens to my retained earnings? Exactly. Retained earnings, unless if they mention some dividends to be paid to the shareholders, then your retained earnings changes. If they don't say anything, that money will be taken into your balance sheet. So I will always link retained earnings with profit. So I'll show you how to link it. Go to the retail and profit cell, click on equals, then take your cursor, place it on the profit. Click on profit. It changes. Tomorrow, if I change profit to say 3,000, see what happens to your retained profit automatically. Even that changes. If I make it 2,000, even that changes. So that's why whatever is my profit is my retained profit. And you might ask, what you're saying profit, but how come profit is under liability section? Because I told you any profit we make, that money belongs to shareholders. We are liable to pay that money to them. Any day, if they ask, we have to give them. So I am always liable to pay that money in future if it is demanded by the shareholders. Okay. Then I need to add up total liabilities plus owner equity to check if it balances. So sum of, open the bracket, select 10,000, select equity capital, select retained profit. Close the bracket, enter. 1,15,000. Before I start the asset, right now I need to know how much money it's left in my bank after all the incomings and outgoings. So sum of, right from 1 lakh to 20, 10, 20, everything. Close the bracket and I get 50,000. So 50,000 is remaining in my bank and that is your end of period cash. That is the cash where you will be linking in your asset. Where you will again click on equals and take your cursor, place it on the cash and enter. So tomorrow, if your cash is 60,000, see what happens to your end of period cash. That also changes. Okay. So right now, I'll just type sum of, close the bracket, 50. Yes, I was about to get to that. Right now, that's a good way of finding out. Right now, you have sold 50 books, right? So in your storeroom, you do not have 100 books. You only have 50 books at this point of time. So then your inventory, 100 books will become now 50 books. And enter. So it will be equals sum of, open the bracket, write from cash till account receivable, close the bracket, and enter. Perfectly matching. Balance sheet is matching. Company is under profit. Still they have it's a cash rich company. Still they have 50,000 in their cash. This way you actually calculate income, balance sheet, cash flow at one shot. Any doubts so far? Any one particular thing you want me to explain? Please don't hesitate. Ask me any number of times. Okay. Answer to my question so that I'll know how much I understood. How many books did we buy? Can you answer me? We bought 100 books. Okay. For what price? Rupees 100. In my
100.
yeah. So my storeroom value is how much? 100 books into 100, right? Which is nothing but rupees 10,000. Then in that month, I sold 50 books to a customer. Where will I get that 50 books? Obviously, from the storeroom, I have to take 50 out of 100 and give it to the customer, right? So now I have how many books in the inventory in the storeroom? 50. So now, what is the value of my storeroom? If someone wants to steal my books in storeroom, how much money he will take it away? So it will be 50 into 100. So now my value of my inventory is 5,000 because 550 books I've already sold. That is how I've calculated the inventory. Is this clear? Okay. If you all have understood, I'll give you 15 minutes time. Take your time, slowly you solve it one by one. Try doing case number 2 and case number 3. I will wait for it. They're asking this. Waiting for the answer. We'll wait for others also to give me the answers. The, only two people have answered so far. I'll give you 2 more minutes. Is the balance sheet matching all of you? Okay, we'll start solving. Let us start. Given enough time, let's go through one by one. January 1st, 1 lakh capital introduced in the capital. Very much similar. I don't have to explain in detail. I'll quickly do it. 1 lakh. So what happens to my bank? 1 lakh. Computer purchase is 20,000. Same. Advance rent 10,000. Deposit 20,000. 11th Jan, I purchased 100 books worth rupees 100. Inventory will be equals 100 into 100. Let's see whether you guys are correct. Let me finish quickly. I purchased 100 books worth rupees 100. How did I pay? Obviously, I paid from my pocket. It doesn't say credit. So that means how much money goes out of my pocket? 10,000. I sold 50 books for rupees 200. So quantity sold, it is selling price. And it does not say receivable or anything like that. That means I have received that money. So it will be 10. That's my 21st January, 16 January. 21st January, I bought 100 books worth rupees 100. Okay. But before that, what happens to my inventory one? 100 books will change to 50 books because 50 books are sold. My inventory book, again, I bought it for 100 books for 100 rupees. But this time, I told I'll pay them after 30 days. My account payable will be 10,000. Nothing from the bank because I said I'll pay later. Again, I sold 50 books for rupees 200. 50 books for 200. So what happens to my inventory? The second in storeroom will also become 50 into 100. But this time, I did not receive that money. It says amount will be received in 30 days. So sorry, my account receivable is 10,000. What happens to my COGS? Again, right? Quantity sold is 50 books. Cost price was 100. Second one also 50 books I sold, but this time the cost price also 100. Finally, salary is an expense. I paid 5,000 to the employee. How did I get the money from? Obviously, I paid from the bank. So minus 5,000. So how much money I have in the bank? 45,000. That's my end of period cash, which is an asset. So equals 45,000. So now I'll add up total assets. My retained profit will be equal to this profit, but let me calculate profit first. Equals sum of all the incomings, sale 1, sale 2, minus sum of all the expenses, 5,000. My retained profit will be equal to profit, and total liability will be sum of everything. So you people are absolutely correct. Many people have given the right answer. I'm happy you are understanding my explanation. No confusion. Very good. Others, please ask me. Not necessarily everybody should understand. There could be chance that you might have missed it, confused, gone wrong. Anyone in this class went wrong in any particular line of item, please tell me. So I will know where to stress more in my next explanation. In cash, why you added 10,000? Yes. See here, on 11th, 16th Jan, I sold 50 books for rupees 200. How much money did I get? 15 to 200, 10,000, which I did a sale. And that customer paid me 10,000. That 10,000, where should I put? In my bank. So money going to the bank, which will become positive. Whereas the second time when I sold, which was on 26th Jan, see what it is telling. I sold 50 books for rupees 200 per book. Amount received will receive after 30 days. So that customer did not pay me. He only took my books. He said he'll pay me after 30 days. So I did not add anything to the bank because he didn't pay me. What I did, I have put it under the account receivable. Great. Start solving the third one. Very true. Case 3 and 2 is very identical. Only one line of item changes most of the things. Why I gave second and third same is for practice. More you practice, it gets better. So I'll show you, friends, what is that difference. But if you have found out the difference, is your balance sheet matching? Exactly. So that's the reason I picked up the third one, the same as second one, with just one small changes. Okay, I'll just do it quickly, so no waste of time. I'm not explaining until the last one because I have explained the same thing the previous problem. Where is the mistake? 1 lakh 20, 10, 10, 10. It's the same as the previous problem, but there is a last case study. We went up to 28th January, but this case study has up to 31st January. Okay, the only difference is the date. The only difference is the date. What I told you about the rent, what happens after 31st Jan? What happens to the rent? Do you still consider as advance rent when you have already used all 31 days PG? Do you still consider as advance rent? Yes or no? You cannot say advance rent. Now it will be considered as rent paid. So when you say rent paid, it comes under expense, which is a income statement. Okay. So what happens here? Your rent will be how much? 10,000. So your rent will be 10,000. Whereas your advance rent will be removed from. And now calculate properly sum of all the incomings minus sum of all the expenses, which includes rent also. It matches. Small concept, if you can apply, then it is not so difficult. So even dates plays a very important role when you're working in financial accounting. Matters a lot. Just type number 3 for the case 3 if you have understood. And can I go ahead with the next one? Advanced rent you want me to explain? Okay, others who have understood, please go ahead with the question number 5. I'll give you 15 minutes time. Go ahead and solve. Now, somebody wanted to explain about advanced rent. See, when do you call advanced rent? When you want to buy or utilize service for future. So you pay advance rent. Now when you go to gym, you pay by after end of the month or you pay just on the first day of the gym. Always you pay in the beginning, right? So that is called advance rent. They owe you for next 30 days because you have paid well in advance. That's why we put it under asset. Once the 30 days over, that rent is no longer an asset or no longer advance rent. It's no longer advance, right? It's no longer future because all 30 days are past. So your next advance rent will be for February month. But I don't care about February month. I'm closing everything as on January 31st. The case study 3 is also only based on January 31st. So when I have utilized all the 30 days, no more it is considered as advance rent. It will be considered as rent paid. When the minute it becomes rent paid, it becomes an expense, not an asset. And when it is expense, it will never be in balance sheet, it will be there in income statement. So you have to understand when are you doing prepaid expense, when are you doing expense. The minute it's an expense, goes to income statement. The minute it's a prepaid expense, it goes to the balance sheet under balance sheet asset because you have utilized your service. I hope I made it clear. If you have done, just relook at the Excel sheet, see if you have done any mistake, make some changes. I want at least one person in this batch to able to give me the right answer for this. I hope one person, or maybe more than one. I'll be very happy. With all the concept what you have learned, please put that in your mind, and I'm giving you 15 minutes time. Please solve it. In case in between you get any doubt, you can ask. Are you able to do it? You need my help. You need more time or what? Please communicate. Okay, I'll wait for 2 minutes. Whatever answer you got, please just put up in the chat box. It's okay whether it's a right answer, wrong answer, that's a different thing. I want to know how much you have tried. What was your total assets? At least just tell me what is your total assets, or at least what is your profit after tax. Okay, no problem. Only one person is giving me the answer. Others? Suddenly the attendance is dropping. Continuously we used to have 46, 47 students. Today only 39 students. I want full attendance. Please note, if in case if the attendance falls below 40, I'm not going to share the recordings. And if I'm not getting a response from anybody, only some 2, 3 people are responding, I'm not going to share the recording. I want to have your full attention during the live classes. So today, please let all your friends know. If in case the attendance falls below 40, I'll not be sharing the recording. I want all of you to respond. I'll start now. That's fine. Please understand, this is the last problem where I will be teaching you. When the 6 and 7 is complete your assignment, you need to submit it. Try doing it by yourself. On 1st January 2019, you started a business with 1 crore. So I'm sure you would have put it over here. 1, 2, 3, 4, 5, 6, 7. And obviously the cash would have increased by 7 zeros. 1, 2, 3, 4, 5, 6, 7. Then you have taken loan of 50 lakhs. That is 50 lakhs. 1, 2, 3, 4, 5, 6. Cash also 50 lakhs. All of you would have done this. You bought a machinery at a cost of 15 lakhs. So machinery means fixed asset. But remember what they're showing here is net fixed asset. Always keep in the mind when it comes to cash flow, you record it as gross fixed asset. In balance sheet, you record it as net fixed asset. What is net fixed asset? Next fixed asset equals gross fixed asset minus depreciation, which we have done in the yesterday's problem. What are they asking the assets? Net fixed asset. So you bought a machine of 15 lakhs and useful life of 10 years. So that means this year, how much will be depreciation? Anyone can tell me what is the depreciation value? Exactly, 1.5 lakh. So 15 lakhs divided by 10, you get 1.5 lakhs. So your net fixed asset will be 15 lakhs. 1, 2, 3, 4, 5, 6 minus the depreciation, which is 1.5 lakhs. I think I put one extra zero. 13 lakhs 50,000 is your thing. But I told you in your cash flow, you have to put gross fixed asset. And should I put plus or minus? Exactly. I have paid money to buy the asset, so money is going out. But I have to put gross fixed asset. So this is 15 lakhs. So keep in the mind, in cash flow it is gross fixed, in balance sheet is net fixed asset. That is third. You paid rent 12 lakhs annually, which includes 9 lakhs of rent of 2019 and deposit of 3 lakhs. The total rent expenses is 9 lakhs. Deposit means asset, 3 lakhs. And total money going out of your pocket minus 12 lakhs. Any doubts so far? In case if you have made a mistake at any line of item, please put it in the chat box saying that, sir, I went wrong here. Sir, I think I missed this. Sir, I thought in this way. So when you start telling me in the chat box, then I will be able to explain it to you in a better way for the coming problems. If you're just rectifying it by yourself, I will not know where you have gone wrong. Okay? So please keep communicate to me in the chat box. You purchased 80 televisions at a cost of, in the rent deposit, it should be 12 lakhs. Not really. See, if you observe here, your deposit is only 3 lakhs. Okay, okay. So you have to only go for deposit, is it? That's advance payment, which will come under asset. Whereas you have already done a rent payment, which is an expense, which will come under income statement, which is 9 lakhs. But when you have cash, totally you have gone as 12 lakhs out of your pocket. Point number 7, you purchased 80 television. So what happens to your inventory? Equals 80 into what is the price? Cost of the TV is 2000. 1,60,000. Did you pay full amount from your pocket? No. It says you only paid 50% from your pocket. That will be minus 80,000. Remaining 80,000 you will pay later. So account payable is 80,000. So 80 plus 80, 160, it is matching. You spent 30,000 rupees on marketing expenditure, which is an expense. So it will be here 30,000. And money went out of your pocket minus 30 or your bank. I will come to that. Once I come to that line of item, I'll change it. I sold 65 televisions at 50,000 rupees each. Equals 65 televisions into 50,000. That is my selling price. And this money did I get? Yes. That equals 65 into 50,000. 32 lakhs I got. Because, am I not audible, guys? Okay, I am audible. Okay, please check your internet. Now I sold out of how many? Out of 80 televisions, I sold off 65. What happens to my inventory then? Now 80 becomes 80 minus 65 is 15, right? Now I'll have only in my inventory 15. So my inventory reduces drastically. 30,000. And I sold 65 for 50,000. So what happens to my COGS? 65 quantity sold. What is the cost price? 2,000. What's the gross profit? Sale minus COGS. Okay, salary spending. Hire 3 workers at a salary of 12 lakhs in total to be paid. What is the salary? 12 lakhs. But there's a problem over here because I have only paid 70% in cash. That means equals minus 70% into 12 lakhs. It is 8,40,000. And remaining 30% I'll pay next year. Okay. So equals 30% into 12 lakhs. So what is my EBIT? Gross profit minus market expenditure. Sorry, EBITDA is there. EBITDA is nothing but gross profit minus OPEX, operating expenditure, which is marketing expense, salary minus rent expense. What is my EBIT? EBITDA minus depreciation. What is interest expense? What is the loan I have taken? 50 lakhs. What is the rate of interest? If you see on the point 1, 13% per annum. So my EBT will be EBIT minus interest expense. And what is tax? EBT into what is the tax rate given in the problem? 30%. 57,000 equals EBIT minus tax. This 57,000, how did I pay? I have to pay from the bank, right? And even this interest, how did I pay? From the bank, right? So it will be equals minus 6,50,000 equals minus tax 50. Any doubts so far? You want me to repeat any particular topic? Yeah, we have not paid 30% remaining, and that is why I put salary payable. Arre, inventory, I told you, no? How many TV you bought? 80 into 2000, right? You bought 80 televisions for 2000 rupees. It is 1,60,000 rupees you paid. But now in your storeroom, you no longer have 80 TVs. How many TVs you have? So you need to check how many did you sell. You already sold 65 TVs. So can you tell me how many you have in your storeroom? You have only 15. So it will be equals 15 into what price did you buy the TV for? 2000. 30,000 remaining. Did you get this? So what happens to my retained profit? Same as my profit after tax. So what happens to my total liability and equal? Sum of everything. Please explain EBITDA once again. So that means you're not practicing the previous classes. What is the formula for income statement? EBITDA minus EBITDA is equal to gross sales minus OPEX. This is what we were taught to you in the income statement. What do you mean by OPEX? Rent, salary, all indirect expenses, marketing expenses, R&D, traveling, commission, or stationery, insurance cost. So it doesn't matter. So here, what I've done EBITDA. What is EBITDA here? Equals what is your gross profit? This minus what all your indirect expenses, marketing expenses, minus salaries, minus rent expenses. What is indirect expenses? It is no way directly related to your revenue. Whether you make zero sales, 1 crore sales, end of the day you need to pay the rent, marketing expenditure, salaries. So that is your operating expenditure. So your EBITDA, what did you do? Gross profit minus all the expenditure. Then EBITDA minus depreciation, you get EBIT. EBIT minus interest, EBT. EBT minus tax, profit after tax. I think you have not attended the income statement class. So that's the reason I told you not to miss any classes. If you're missing classes, each class is interconnected. And then you will come back to me and ask for the class which I have taken 3, 4 classes before. Then complete confusion will be there. And the reason why I'm sharing the recording videos is so that it will be helpful for you to practice, revisit those concepts. If you're forgetting the previous concepts, then existing problems you will not be able to solve it. So please don't take it lightly. Okay, so what about cash? So it will be equals sum of all the cash transactions. Close it, enter. So what happens to my end of period? Cash equals whatever I have in my bank balance. Let me now go click on sum and add all the assets. It is absolutely correct. So matching. Any doubts in this? Salaries in income statement are taken only 70% instead of 100%. I forgot deducting interest, expense, and tax from the cash. That's fine. Please understand whatever you are spending, check whether it is going from your bank or it is not going. So very important when you're doing an expenditure, money is going out. And in income statement, doesn't it is not related to cash. Whether how much you have paid, not paid, it does not matter in income statement. How much it has incurred. Tomorrow you have not paid 1 rupee also to salary, but you still have to record 12 lakhs. So that is about income statement. Cash, whatever comes, whatever goes, did too. No change at all. You have to record it. So that's the difference between income, balance sheet, and cash flow. I hope by explaining you this, you got a fair amount of idea what exactly is income, balance sheet, and cash flow. Now tomorrow I want you to solve 6 and 7, and I will start cash flow statement, which is indirect cash flow statement. And then what we will do is we will combine 6 and 7 with something called as indirect cash flow. It's on the right side. So if we do that, we complete the entire financial statement of analysis, which you will be ready for the case studies. This is also part of financial modeling. So great, thank you. Have a wonderful evening. I'll see you tomorrow at 4. Yes, yes, I will. I'll just save it. Thanks for reminding me. Yeah, it is saved. I'll be sharing. Okay, bye.